how to get up to $26,000 per employee in a refundable payroll tax credit. You get rewarded for retaining your employees during the height of the COVID-19 epidemic. Not letting it go back to someone. You get to keep this and use it as you choose, as well as going over a business funding scenario of getting the client just around $100,000 with some extreme measures we took to get them funding. Again, I'll be giving you the play-by-play, what happened there, as well as alternatives like 0% interest for 6 to 18 months and up to 150, if not 250,000. And being able to get these business credit cards, you can liquidate the cash out of, put them on a balance transfer, put them on a balance transfer check, and deposit them how you choose, and being able to use that for any investments. Good, bad credit, with or without collateral, lower, no doc, medium, higher documentation, and a lot more. Hi, this is Michael with Viral Funding Solutions. I'm an expert business loan broker, and that's another way of saying I'm able to help connect you with the best lender or lenders, the best network of underwriters or underwriter, and be able to help you fulfill on getting the right type of business funding without heckling, without pressuring you. Literally, I am not that person to do that. I won't overpromise and underdeliver. I won't overwhelm you. That is something that's very much so guaranteed. And I come from an academic background, and I went to university, community, and I do things very disciplined and punctual wise. And so I want to make sure you're getting the best. And so I'll be going over some of these things. But first of all, what is this up to $26,000 per employee in a refundable payroll tax credit? Well, that's basically what it is. So what this is something that's given through the Treasury Department for being able to retain those employees because you've had to partially or fully shut down a government mandate for gross reduction or gross receipts. Perhaps it also impacted your profits, your cash flow reserves went less. You probably didn't have as much established of a relationship with certain providers. It didn't help you in many causes, suppliers, vendors, the list can go on and on. And so there are multiple ways of qualifying for this. If you have W-2 employees, we're not looking at W-9s, we're not looking at something else, usually up to 500 employees, and we're looking at the 2020 and 2021 quarters relevant to what was happening in 2019, so we're not double dipping as well. If you have had a PPP loan, maybe it has been forgiven since then, but we want to make sure we're not double dipping with this service on top of that one. And so there are two different ones. I won't go into PPP versus ERC right now, but if this is something you are interested in learning more about, how you can qualify for it, and if it is worth your time, of course it is. And this is something that could expire by the beginning or late 2024, if not by 2025. And there is no indication that this program will be around for longer. So make sure to check that out. That's something that I highly recommend each and every one of you do. If you have W-2 employees, and I'll walk you through the process down below or in the bio if you're watching elsewhere, but on the replay later with YouTube, down below in the description, one of the very first two links you can click on, and it'll take you over to my page where I should have a video. It might be different by the time. I'll get to the comments in a moment. But once you see that video, if there, underneath it, you can see more of the qualifications and then see what it entails. And then you can click a link or a button there and it'll take you over to the process. And there is no application fee, no hidden costs. You can actually see how much you can get approved for from the beginning, what it could look like before a readjustment. But then you would submit some simple documentation, payroll documentation, tax documentation, a few more things if requested and asked for. And I work with the best payroll management team on this, my internal team. And I'll be there every step of the way also to help you, and we can file on your behalf, the payroll management team, more so. And so you don't have to go at it alone. You don't have to turn to your own CPA because the majority of the time, they don't understand more beyond certain gross reduction, and they may not have a clearer picture on that when it comes to payroll management and it comes to certain laws and regulations, making sure they understand the right tax codes. And so that's where they get all that jargon from, and they just don't align with it. And so it's not always in your best interest to turn to your own CPA. You want to have it in the hands of the experts who will maximize your amount of credit, who can maximize what you'll get, and be very realistic that this would actually be something that could work for you and maximizing those gains ultimately. So I'll leave that down below. I'll transfer into the next segment here, but let me go to the comments 1 second. Good question. What if you have 2 employees? Yes, it's still possible. We've done it where It's case by case scenario. Yes, you could do this still when you have less than 3 or 5 W-2 employees. Now, how it's listed as employees, a lot of people, they want to list themselves, but it's if you have other W-2 employees, not besides the owner. But we can look at it. It's per case basis. Sometimes when it's less than 3 or 5, it becomes much harder to do. But it's something we're willing to look at. Nonprofits, for profits. But that's something that I recommend. And in the bio, if you click the link, it should probably take you to my link tree here on TikTok. As we've spoken before, the link doesn't sometimes show. Mike, I'll get to you in just a second. But I will say this, that the link may not display here on this TikTok channel. So if you guys can, go to Viral Funding Solutions or viralfundingsolutions.com, or email me, which it's Michael, my first name, Michael, at viral, something goes viral, funding solutions with an S at the end.com. Michael, yes, I did. Oh, sorry. I'm so used to saying, do you prefer Mike or do you go by Michael? I did send you an email. Yes, I did. Check your inbox. I sent it. Let me see. I can actually show you the exact time that I sent it. 11:34 a.m. Pacific Standard Time, which was 45 minutes ago. So it could have landed in your spam box, Mike. I've seen it where it lands in also the promotions tab. But yours is set up different with your at SPC. But it could have landed. I've seen it with .nets. They do land in the promotions. They land in the spam box a lot more than other email addresses. I've seen that. And mine's a professional one, just so you know. But yeah, it's from what I just said with my email address. That's where you want to look at it. And it's right here. I'm looking at it as it says, here's the real estate questionnaire form. And I added an additional if you want to submit something forever business funding related, not realistically real estate investment related. Or if you ever had like a new construction project, we can do the real estate form. But there's so many loan scenarios that we can look at. Got it. Yeah, but I did send you the email. All right, now I'm going to transition into a next segment here with a loan scenario a business funding scenario where I was able to help a client today, many actually, clients get the funding that they needed. I didn't pressure them at one point at all. I'm not like that. And so over here, I have something on my email opened. I want to walk you guys through a loan scenario or an advanced scenario where I have had a returning client come back to me. I won't reveal their name or name of their business, but loyal, and they came back and they needed more for remodeling, renovation. They needed some things for their restaurant. Unfortunately, here's a little bit of a background. They had to partially shut down for a month, for about 2 weeks out of that month. I won't say which one, but they had their gross receipts or their gross revenue dip. We've seen on their file, as I received wording from my lender on one of them, that they have negative days or non-sufficient funds, and they must have less than 5 or equal to 5 of a combination of non-sufficient funds and overdrafts. And so with them having too many, and they were also submitting their application elsewhere. So what I tell business owners is just don't do that. You're going to understand why that's the case. They were trying to go back to the same lender that they received initial funding with, thinking that they would give them another second position that way. Going to an A tier. This isn't an A tier client. This is like strong credit above 700. This is way over 50,000 in monthly revenue. They have way over 2 years time in business. They have what they need. We can look at an A tier lender. We got them an A tier lender back. I won't reveal that name too, but we got them initial funding of about 200,000. 200,000 is what they got. And they haven't used it all, but they needed more. They need a second position. They're growing fast and rapidly, and this could be a better benefit. So they know how they'll use it. And so they came back after they weren't supposed to just go and apply again. That's not what they should have done. But sometimes you as a business owner do that without consulting. This is why you want to work with an expert. This will be very revealing in just a second. So I see here another ISO had already submitted this deal and has been declined in the past 30 days. And on top of that, the too many negative days, there could have been more than. So I see here another ISO had already submitted this deal and has been declined in the past 30 days. And on top of that, the too many negative days, there could have been more than a provider and a lender. So I really have to get that call. So I'm going to take about 2 to 3 minutes, guys. I might jump on this in a little bit back, but that's an urgent call. And so very quickly, we were able to secure for them around 93 to 95,000, around that range. I won't say the exact amount, just underneath it. Additional amount of a second position, what they initially received was 200,000, but because they have those non-sufficient funds, those negative days, they have what they have, and that their revenue had dipped, and what happened in that month that they were going through, then that business owner, we were looking through a few lenders. So we were able to do an in-house look where we're going to protect your credit. We're going to make sure we're not just shipping and shopping your information around. We don't do that at all. Other organizations will do that, but it's better to do it in-house because I already have those long-term partnerships with those lenders anyways, those direct lenders I'm already in partnership with, in the best. And I can also go directly to one of them, but it's better to do it in-house. So what we were doing, myself and my team, we go, well, we have A lender, we have B lender, we have C lender. We want B lender, or A lender's out, C lender was out, but B lender came in and said, we're going to give them more. We want to establish that relationship with them, build it with us. And if she had not done that, if she thought, oh, I'm going to go somewhere else, I'm going to see if another organization, I know this wouldn't have worked that way. I know this because of the relationships myself and my team have with these lenders, with these providers, personally and in business. I've been in communication directly with lenders, with the underwriters, with my internal team on some things. And so when I get feedback, I know what they should and shouldn't be doing. And so what happened is yesterday, my client received a contract agreement. I'm not going to say from who. I know who it is, but not rightfully so, because they were wondering, hey, Michael, is this coming from you? And this is the next part. What I submit is only coming from us. It does not go from us to 10 different parties, and now you're getting contacted by 14 lenders. Other organizations will do that without your consent, without you even knowing. You probably did click something, or you signed something, or you check mark something, and now you're getting contacted by multiple entities. Or what happens is a lot of these entities know you've applied because they can look at the credit bureaus and withdraw that information, buy that information, goes to the highest bidder, and they can go out there and find you and then email you and say, hey, here's the contracts, just sign them. And so I had my client reaching out to me, hey, Michael, who's this funding? There's this program. And I go, I know who they are, but it's not coming from me. It's not coming from us. And so just don't listen to that. Hold off on that. Don't pay attention to it. We're going to have something better for them. And so today, hearing back from that lender, that association, what they would have received initially, they would have probably got less than 35, at most probably 35,000. But we not only just doubled, we almost like tripled that, honestly. And so with that being said, we were able to get them a lot more. We actually did triple pretty much. But we were able to get them a lot more than what initially was perceived. And if they would have gone somewhere else, yeah, they probably would have got closer to 20 to 35,000 with their drop in revenue, with their non-sufficient funds, negative days, a few things in that. And it's not always the same for each person, but there's a reason why people come this way, because not only am I able to compete and usually beat all offers that are out there because of who I know and what I know, but also with my internal team and what we're able to do, how we're vetted in, how we're able to go to work for you on the back end on what you're not seeing. And so with that situation, and they had accepted. And so what will happen is, though, with everything given, with her situation, with the drop in revenue, the lender just wants to be safe. So what that lender will ask for is not just 3 months of bank statements or 4 months, usually for their state 4 months in California, but they will ask for 9 months of bank statements. I know that's kind of a lot, but in a scenario like this, where it's very big, where we need to make sure there's historical enough data, which we will see and we should know and it should be there, but we need to know that she can handle these payments and whatever happened back from March to November, or March, closer to March, those last 3 months from there. So we need to ask for those, not always, but a lot of the times the lender will come back to me and I'll be honest and open with you and say, hey, that lender would like to ask for your 9 months of bank statements from, let's say, March to November. And maybe we already had some of the bank statements, but they want you to resubmit it and they want it done this way. So that's all they're asking for. Nothing much. Just, can you please get these done? Do you need to get authorization from a CPA? Do you need to get this? Just, it's easier said than done sometimes, but it's very simple. And if you have them ready to go, it shouldn't be an issue. But that's one scenario. Earlier, I'll get to the comments and I got to go really. But helping them get funded again, there's no greater feeling And I'm there by their side, checking in, seeing how they're doing, helping them out, giving them extra bonus tips, bonus material. And that's how I'm going to be there for you. I'm going to go to battle. And another business owner, a trucking business owner today, had a great talk with them. And he is good with his words, like choosing when to say something, when not to say something. I could tell. It's not like you have to say a lot to know a lot. So he said a few words, and that's all I needed to. I'm the same way. I'm an introvert, so I don't have to say much. But he met me where I was at, and I communicated with him what offer he was receiving, and he was happy with it. He's like, yeah, I got to start somewhere. And so he's another client. And then there are more clients, and it's not always like a phone call is going to be necessary from me. You could just get it through an email, and if that's your preferred method, that's okay. And I'm okay with that too. I'm an introvert too, so don't worry. I won't pressure you at all. So let me go to the comments, and then I'm going to close up here in a bit. To you, they are. So what do you consider higher interest rates? Is there a specific sub-segment? Like you can say there's a range that I think it's just too high, but do you have a situation and experience where, hey, this was just too high? Because too many times I keep hearing the interest rates are high, they're too medium to high, and I get it, they are. I'm not going to say they're not. I would be pretending if I was saying they weren't. But what is inexpensive anymore? Can you guys give me an answer on that? Look at SBA loans, 10.5%. You're getting an Express Microloan. Those you're probably getting up to 3.75, if not up to 6.75%. You're getting into the early 11s on those, early 11 to 15%, if anything. And collateralized loans, you probably get 7 to 15%, 7 to 10%, depending on the collateral. And then some other options. So if that's the case, that just means that your benefit of taking that money does not exceed your repayment. It's not about the interest rates. It's about how you use that money and you put it to work. Are you taking that money to double, triple, quadruple your revenue? Are you using it just for a short setback? You need to make repairs, and you need to take a short cash flow decrease. If that's the case, you got to understand your numbers. Say, hey, for a period of a month, my numbers, because I'm trying to pay this off, is going to go down for this amount of time. This is what it would look like on a daily, on a weekly, on a bi-weekly, on a monthly repayment basis. But I'm only getting daily or weekly for those. And that's what exists in this market. Monthly, just too hard to get. Even cash flowing businesses that are high, doing a lot, profitability, revenue-wise, doing $30 million a year, those are also businesses that are getting a weekly repayment with all details considered if they're getting that. So monthly can cause a lot of defaults. There are some cases where we can do some kind of debt consolidation, or we can put it into a monthly, but it's a lot harder to unless you're going to a bank. You're working with a bank-specific lender or a loan, then that's where you're looking at more monthly repayments. Some of these we can do monthly, but don't expect that to be the case. It's much harder to. You're already probably tackling a lot of payments, the medium, the higher rate on top of that. It can be more costly, and it would be something that you can fall on behind like very quickly. You already have credit cards, business credit cards, personal credit cards. You have rent, mortgages. You have other liabilities, maybe other businesses you're making payments on. Your debt to income ratio is already high enough. Your utilization, you think giving you a payment of about $4,000 to $6,000 at the end of the month, if not $10,000 and above or so, is good enough. For certain business owners, it is. They're like, yeah, I can do that. So if you can't get it through that, try to do an SBA 7A loan. SBA loans, you have personal loans you can use for business. You have business credit cards, personal lines of credit, perhaps home equity lines of credit, home equity loans. 401k IRA financing, you have equipment loans, business lines of credit, although those are usually weekly right now in this market because they're also harder to attain. Let me go to the comments and I'm going to close up here in a moment. These loans are not good loans. We'll call them advances because technically they're not traditional business loans. They're based on future receivables. They're non-APR specific or interest rate specific. And this is because they're based on future receivables. And a lot of the times they don't report timely payments to the personal credit bureaus. A lot of the time, sometimes they will, other times they won't. It's when you get yourself into a default, which I'm going to get into in a second here. But it's about how you use the money, guys. Don't hear it from someone else's experience and think that's what I'm going to base it on. That's false pretense. That's misconception. That's misunderstanding. That's the wrong belief. And if you're thinking that way, you're only thinking one way, it's time to open up your mind to things. And this is what I'm here for, to educate you on. No pressure, no, I'm going to bash on you and tell you, well, you're not doing that and this won't work. And because you, no, I'm not going to do that to you. But at the same time, I'm also not going to chase you. I'm not going to just continuously try to hammer down something and be like, are they going to be responsive? I will follow up accordingly, but are you going to be punctual and disciplined? That's the bigger question. So These loans are not good loans. The interest rates are really high and the terms are not good. I knew somebody that defaulted halfway through and had to pay the entire amount back. I mean, that's their situation, right? Did you ask them? Did they know what they were getting involved with? Maybe they did, maybe they didn't. A lot of the majority of people I talked to, they didn't know what they were getting involved with. I just need them. What were they using the funds for? That's a bigger question. Like, yeah, if I'm taking the funding just for COVID relief, I need the money to sit there for working capital for 8 months, and I'm not using it to grow and expand. Well, can they qualify for an SBA loan? If their frequency of depositing isn't already up to measure, they're not depositing every day. They're not depositing like a retail or restaurant business is. They're not depositing like other businesses are. They probably have something at the end of the week once or twice, and then maybe the next week they don't have as much, or then the week after that. So if they can't handle the payments, whose fault is that? Who's liable? Who should be held accountable and responsible in that situation? Just the business? No, the business owner, the person. More so, not just the business owner, but the person, character and reputation. The character should be held liable, and it so should be, because it falls back on the personal credit. At that point, now it displays you defaulted. You probably have a default judgment in place. You haven't made the payments. Now you have a court order, and you haven't conformed to that agreement. And so now, later down the road, you're like, well, that default was about 4 to 5 years ago. Yes, there is a possibility with 1 or 2 lenders that I know that are the best at what they do, but they're not going to always say, yes, we're going to help you with the default. We're going to give you a lot. No, we're going to give you a very little amount, if anything. So it all comes back to how you use this funding. If they were educated enough to understand what they were getting involved with and how they use the funding, because if the benefit, it seems like the benefit was probably there, but it didn't extend past the repayment. The repayment was probably already suffocating. And so if it wasn't, the thing is they probably did it for like a month or two and they didn't pay it off. Certain things came up and they arose, and he was probably falling behind on payments by that point. So how do you use the funding? You use it appropriately. You use it to purchase trucks if you can't qualify for traditional equipment, or you feel like getting a lump sum is better. Maybe you use that also as a down payment and the rest of the money you have. Maybe there's other seed capital you have, or you have differences where you go, I need it for working capital, I needed it for equipment, I needed it for growth and expansion, I needed it for marketing. So you get it all in one bundle and you can qualify for that. So it just depends. But what type of business were they in is my question. Because that also tells me a lot. If they defaulted, it'll tell me a lot also on their industry. You're welcome, Chico. Appreciate you. Thank you. About 2 or so more minutes. Unless anybody has anything, I can wait on them. I probably will call them back by like 12:45 p.m. if possible. Exactly. That's the answer right there. I like that, Chico. Thank you. And you're right on point. I don't have to talk on the subject. I'm sure you know about it, but for everybody else in here, goes out without being said, that the entrepreneur has a different mindset. I'm an entrepreneur and business owner. So I run my own businesses. I have courses that I've created and stuff in different niches. But as an entrepreneur / business owner, the way we think and formulate our thoughts are not just like business owners. So we have entrepreneur / business owner, self-employed, classify it as you can. We have business owners, brick and mortar, online businesses. Now, the business owner I just need to get my startup company, I need to just get money rolling into my business, is just doing everything. Maybe you're the person at the front end doing everything. You don't know how to do any marketing. You don't know how to do any product differentiation. You don't know how to service the customer correctly. You don't know how to do the finances, the operations. You're doing that, but it's just like not as fluid, or maybe it is. Maybe you know all of these things. This is why when you're a one-person team, it's harder to do everything, or it's harder to delegate until you get to a point where you see this is working for you. You can do it earlier, but the thing is, as the business owner, and this is not bashing down, I'm not saying this is negative really, but you have to take a step back and say, well, I'm wearing on multiple hats. At what point do I have to also, when I go get funding and I work with this guy, Michael, and I'm not going to waste his energy and time because I don't know my finances, I don't know what strategic position is or what it would look like about 6 months, 12 months down the road, whether you have the funding or not. That's how you prepare. An entrepreneur, we're thinking far ahead than just 3 months, 6 months, even if that's only what I received in funding. I'm thinking profitability, if that has an effect or a reverse adverse effect. and what it could do, if anything. I'm not saying that it would help my profit, especially with sometimes a shorter amount, but I need a shorter amount to get out. I need it for marketing campaigns. I need to add more to my budgeting. I need a 1-to-3 ratio. I will not just accept a 1-to-2. I'm split testing. I'm doing empirical data. I love that part. System engineering. I love all the back end stuff of this. And that's what I enjoy to do most. So we have to think appropriately, not just, I need funding. Oh God, I didn't prepare for this situation. And man, or maybe they did prepare, but they just weren't enough prepared. They didn't understand their pattern. They didn't have enough pattern recognition of what they were already doing to get themselves into this position. So they're not really understanding that. Or if they do, they probably just got into a situation in their business where it was out of their control, or maybe it was, but something happened. And now, hey, like you said here, you're right. Read the terms very carefully. Exactly. And I'm not saying that that person didn't read the terms. That's not what I'm saying here. It's just, if I'm going to sign something, it's very obvious. Like, I'm getting medium to higher rates. I'm getting higher rates business credit cards, interest free. And then I'm getting higher rates personal credit cards. I'm getting 18% business credit cards now after my 0% period. Or if I didn't get 0% interest, now I have 18%. And how does that look, APR? And we're looking at all of these numbers, but we're going away from the fact that there's good and bad debt. So I don't care if I get 30% interest. I would care less. Honestly, if I was in a position where my revenue wasn't looking good, my credit score, all of these issues arise, and I can't do credit-based financing specifically, even then when it's higher, because you'll go through that period. I've gone through it a lot of times, still do. But you're going to have that recognition on how to effectively use your money. Until you experience using it correctly, then you'll know. You can't just hear it from somebody telling you, well, these are medium to high. Yes, I'm not dispelling that. Yes, they're not right for the right person. Yes, they're going to backfire on somebody if they take more than what they can chew. This is all correct. This is not nothing new to me. It's those people out there who go, don't listen to him, or it's just, I'm not trying to jam that product down your throat. Guess what? I do all real estate financing. I do all types of business funding. I can do SBA loans. I can go to the bank and work on your behalf with my internal team to get you personal credit cards, business credit cards correctly. Do them correctly. Term loans, installment loans. Do all of this. Equipment loans, startup loans. How does that all look like? Cash advances, term loans, lines of credit. I can go on and on about it. But the point being is, know what you're doing. Simple. But harder for people. And this again I'm not knocking people down. I'm not looking down on you at all. This isn't about that. It's just, there's a time and place in your business where you better separate yourself and start looking at your finances correctly. Meet with your CPA, talk things over, whoever's managing that. How are we looking for the month? What would you project this to be? Let me sit down and look at the numbers with you. Or let me look at them myself. And I can do it myself on my own. And I have multiple businesses. So you better expect me to know my stuff. And if I don't know, why would I want to go get money for something where I'm already going to go cash flow negative, or I'm already cash flow negative? You're going to go backwards. If it's medium to higher rates, okay, do you have the credit? No, my credit's already shot down. Do you have a down payment if you wanted equipment? No, I don't have the down payment. Exactly. Yes, Chico. You're hitting on all good points. I want to say this out loud. I really need to close up here, 12:42. Your business is a reflection of you. And yourself, as many others have heard me say, character versus reputation. I very much value this, guys. I just got a quick sensation down because I worked hard on this myself. And I'm not here just to get people funding. I'm here to change them as well. And I'm not a personal guru or anything like that, but I can give you what I've been able to do because it's a marathon. In your businesses, you're going to have inconsistencies. You're going to. But are you going to be that business owner who gets stressed out and just gets heated and takes it out on your family? You don't even acknowledge you did, but you just ignored. You didn't fully listen and respond back with just a word, or maybe it takes more than that, and you're not all there. I've seen that happen. It's happened to me when I was in the early stages. Don't think I'm anything different. Now I am, but because I went through all of these things. I was never bad. I just had to go through those stages of growing. I didn't even earn anything. I earned my first 8 cents online after doing this for not on this, but a different service. I was promoting different products, but about 8 to 11 months in. But everything before that, like they say, you got to knock down on the wall, boom, boom. And that's what I was doing. Traditional brick and mortar, maybe it's different or maybe it's the same. I earned my first 1,000 to 2,000. Do you really feel like you are grateful? Do you really feel like you are thankful for that? That's my ultimate question. If I came into your business, I don't want to know I want to know you. You might be telling me about your business and showing me, but at the same time, I'm learning you. I'm a very observant person. And so while we are going over your business, I'm learning about you. You're uncovering yourself to me, whether you know it or not, whether I have to peel it a layer at a time. That's who you are to me. I have to peel a layer at a time, and I'm the same way. With me, you have to peel me back like 2 to 3 times on the same layer. I kid you not, because I don't trust easily. A lot of business owners, I don't trust them. Now, you have to earn that trust from me. I have to earn it from you. We have to find that common ground. But you think it's always the other way around. No, I have my together. And so if I'm working with a business owner, it'll be revealing who I'm working with. And I know how things can go in the application process. So it's more about the business owner, it'll be revealing who I'm working with. And I know how things can go in the application process. So it's more about how things can go in the application process. So it's more about the about 1 more minute. Thank you for the follow. Appreciate you. Thank you. Thank you, those of you too, for the likes, the love. I don't say it enough. If you are finding value, I would have said to share this room, but I do really have to get going. It's an important call. But thank you guys. I truly do. When I'm working, you guys don't see what I'm doing on my back end. Like I've told my clients, and a lot of this is harder to show because it's confidential, but I'm going to work with my underwriters. I haven't even had, it's 12:45. I haven't even had breakfast. Like I've been working hard this morning through now, 12:45 Pacific Standard Time. I just had that again. Like there's times where it's okay. There's times where I have breakfast earlier. So I'm going to go do that in a moment. But I'm working hard for you guys. And I do it with full transparency. I'm not here. Literally, I was on a call with somebody in the trucking business today. Was very happy to hear from me. And I said, this isn't a bad time, is it? No, I'm driving. And okay, good. But this won't take much. Probably less than a minute or two. I just wanted to go over that you have an offer available. And I can share with you the parameters. And they were like, yeah, please do. And so I just went over with them, and without a shadow of a doubt, they were already convinced themselves. I didn't have to do any of it. They knew themselves. I just wanted to highlight the reasoning why they were getting those funds again, just so they know that, hey, you can use these funds, come back and get more, and they're getting what's best from the best lender, the provider. They're not just trying to put their application out there anywhere and everywhere and see what hits. If you need a business loan to cover payroll, yeah, that's a good reason too. A lot of lenders in this market are very, like I'll say the word touchy, but very like hesitant. But at the same time, they understand how a lot of business owners right now are hurting with payroll. And in some industries more than others. So they become more attentive to that being a primary use of funds. And at times they wouldn't lend as much for payroll reasons because they want to lend on growth and expansion. Others are more for working capital. Others would say, hey, we needed a longer term for working capital. Is that even something that you can qualify for? And it doesn't make sense. But for payroll reasons, I can get into more questions, but I'm way beyond my time now. But I'm going to try to answer these as fast as possible. Bio, link click, description down below of replay. Click the link, fill out the questionnaire. I evaluate, analyze, give you a proper response back via email. Best funding options, bar none. It'll be very thorough, long email. You might have to open it up on a desktop, laptop. But the first 2 options or so, the ones at the top, priority-wise, are the best for you. I had somebody who could qualify for an SBA, but I shared with them, like, the top options are these. This is what it would look like. The SBA 7A, maybe 2 to 3 options there. The first one's the best one. After that, the hybrid advanced term loan. Here's what it entails. Here's the qualification description. Here's probably some ballpark numbers. Here's how our underwriting can work. Here are the documentation we'll need, how I'll ask for it. Here's the application. If there's a link, usually there's a link on these with fintech companies, so you can really get started. Hey, Michael showed me the documents. Cool. He would like for me to submit the link here. It's safe and secure. Done. We get it on our back end. Boom. Go to work. Done. Get the offer. If I don't even have to call you for an offer, great. You already get an email from me or my team. Great. That's fine as well. You're knowing that this is something I want to move forward with. Decision logic, bank verification check after that usually is what happens. Sometimes if it's a higher amount, we'll ask for certain things, decision logic, hello sign application or the contracts are being ordered, sent over to you, perhaps different emails, get those things done, sent back to the merchant, the provider, the lender. And then from that next step, we can ACH transfer, ACH deposit, ACH withdrawal. That way the lender knows what's happening in the account, and it's very safe and secure. Yes, Herbert. I'm not going to say I'm perfect like anybody. I'm still learning. Even in my industries, even in some in the past, there's things that always change in the market. So I'm always listening. Like last night, I was on the computer for about 2 hours just doing market research on a specific niche of mine. And there's a lot of revealing stuff and where the future is on that. And so I took time to do that. But yeah, thank you. Appreciate that. You need some money to repair your house. Okay, your own personal house. Is that it? I've tried to pay off credit cards but can't manage. Suggestions. What have you tried? I know you said you tried to pay off credit cards but can't manage, but have you tried anything? Like I can get into all this, but how much would you need? We got to look at some non-traditional scenarios, 401k IRA. I know home equity lines of credit, home equity loans, credit-based financing, you can get personal loans, but again, and then you can consolidate those cards. By the way, if you get a personal loan, like a lump sum debt consolidation loan, I help out a lot of people get those. Whether you need it for savings, and it spreads out your term over 1 to 5 years. So if that's an alternative, guys, to advance funding, if that's what you guys would like to do, we can look at that. But it also will display on your credit. So just make sure if you're running a business, or even if it's not, you have everything that's liable and showing and displaying. On some of like the cash advances or term loans, unsecured financing solutions, some of them don't always report timely payments because they're advances. And so they won't display that way and it protects your credit. So in the case that you weren't able to manage those payments, then you could be at fault. You can lose your business. You can go bankrupt. You can do a lot of things. You can go on foreclosure. There's so much. And so it's just understanding about how much do I need to pay this off? Can I qualify for this? We can use personal income, like I was going to use payroll, but the thing we could use are pay stubs and personal tax returns, verifiable income. And there's some ways others to look at them too, especially if you have a business. It can help you. Appreciate you. Thanks. All right, 30 more seconds. Does anybody have anything or else I really will get going? I knew if it was that important, I probably would have received an email from the lender, but I still have to give them a quick call back. Okay, all information in the description, bio, wherever you're watching from. Please get started. Questionnaire form. You can email me, which it's Michael, my first name, Michael, at viral, something goes viral, fundingsolutions.com. Go to viralfundingsolutions.com to get started. Scroll down that page, go to the part where it says how it works. After the 3 or so steps that I created, there will be a button underneath. Click that button, it'll take you over to my questionnaire very likely. You can select from 1 or 2 options that apply to you. Fill out that questionnaire. It should take you no longer than a minute. Usually it does. But just give me some rough estimates if need be. But be as thorough with it. And let me know what you have going on. Like if you specify how much time you have in business, don't just say 1. What is 1? 1 year? 1 month? 1 year, 2 days? And sometimes if you put your name of your business, that's fine. But I can go look for it. Just sometimes I can't see it. I can't find it that easily. So don't expect, that's a huge thing. When I'm pre-underwriting these files, guys, we're not going through an application link yet or nothing. I'm making sure you have what you need and you understand what you're getting yourself into. Not like some people who maybe they know what they got involved with, but if they would have known better before, they probably would have never have done that or done something else or not taken so much. All right, everybody, those 30 seconds are up. Appreciate you all. Please refer again to the description for all information. More information will be there. If you got value from it, please give it a thumbs up. Please share it with others who you feel will find value out of it. A complete stranger, a friend, or a family member, thank you for that. And if you haven't subscribed here or anywhere else, I would greatly appreciate you doing so. Really, I do. I go to work for you guys personally and in business. And I'm going to do my best for you. And I know this because I've been doing it for a long time. I'm certain and confident in what I do. Not cocky, never stubborn, Never an egotistical person, never was brought up and raised that way. All right, everybody. Appreciate you all. Take care. Bye.